Welcome back to Taxes Made Simple. I'm your host, Karlton Dennis, and today we're going to be going over vehicle deductions, my favorite. I have tons of clients who love to buy luxurious vehicles. I drive a Porsche. I had to figure out a way to write it off, and if you're watching this video, it's because you want to learn how to write off vehicles in a simple way. I'm not going to bore you with a bunch of tax knowledge because I know you didn't go to school to learn taxes, and I know you're not spending your free time on weekends reading IRS tax law. So let's dive right in to figure out how we can write off our vehicles in an easy way so we can continue building wealth quicker. My name is Karlton. Let's dive right in. So we're going to go over two different ways in which we can write off a vehicle today. As you guys can see on the board, I have actual versus mileage, and there's a reason why I have this up there. There's only two different ways in which you can write off a vehicle, but there's a number of different ways in which you can purchase a car. So we're going to talk about mileage first. The reason why is most people are used to tracking miles. There's tons of apps, MileIQ, QuickBooks even has it now, where you can track every single mile you drive that is business related. The purpose of doing this is because you, as a taxpayer that has a vehicle that's business related, can get a deduction based on the amount of miles that you're driving that are business related. And the amount of deduction that you get to receive is 57.5% per mile. So it's a lot of tracking, guys. And I want you to track this. And the reason why is because there's two different ways in which you can write off a vehicle. You could choose to take the mileage, or you can choose to take actual cost. Actual cost is probably what you're already thinking, the cost associated with maintaining your vehicle. That could be the payments if you've leased the car, insurance, gas, tires, repairs, etc. Now, the reason why I want you to track this is because depending on what type of business owner you are, you may be driving a little bit, or you may be driving a lot where it might make sense for you to take the mileage. For most of our Uber and Lyft drivers, they're driving a ton, so they're tracking all the miles that they take. But sometimes we have other business owners like realtors, e-commerce, YouTube stars who want to purchase a vehicle and use it for business purpose. So how do we do that? Well, if the vehicle is a business purpose vehicle, we first have to determine what percentage of that vehicle is used for business. Hopefully you have that business vehicle for more than 50% use. I'm advising you guys to make sure that it's more than 50% use. But once we are able to determine that percentage, then we now know how much of that car payment, how much of what we're spending on we actually can deduct as actual cost. So let's say we leased a car that we bought for our business and we had a car payment. If that car is 50% personal and 50% business, we can deduct 50% of our car payments if it's leased. We can deduct 50% of the car insurance, the gas that we put into our car on a monthly basis, the tires that we repair maybe once or twice a year, and some of the repairs such as oil changes, etc. It is so important for us to track all of our expenses because depending on who you are as a business owner, you may be driving a lot, like I said, or you may be having a lot of unexpected expenses that you're not tracking. So I want to make sure that you guys are tracking all your expenses. Now, some of my clients purchase cars rather than lease. I always advise my clients who are purchasing cars to purchase a vehicle that's over 6,000 pounds, especially if they're looking for a big write-off. The reason why that I'm advising them to purchase a vehicle that weighs over 6,000 pounds is because underneath code section 179, you can expense a business vehicle 100% in the first year. Accelerate, depreciate the entire vehicle 100% in the first year. So what I'm getting at is if you purchased a vehicle that weighs over 6,000 pounds that's business purpose, we can write off the entire purchase amount. I had a client last December, right before Christmas, she wanted to give herself a Christmas gift. I wanted her to get another tax deduction. So she called me, she was at the Mercedes dealership. She said, Karlton, I'm about to buy an AMG S550. For any of you guys who don't know, that's a G-Wagon. Okay, that's a big car. It weighs over 6,000 pounds. I said, perfect, send me the details. As soon as she sent me the details, I looked at it and I was like, oh, perfect, this car is over 6,000 pounds. You need a write-off. I needed an additional write-off for you with your tax planning. So I told her to buy it. Guess what? I'm filing her tax returns right now. We have a $155,000 write-off going on her returns because that vehicle was over 6,000 pounds and she bought it last year in 2019. And we're filing her 19 tax returns this year in 2020. See, she contacted me. We came up with the strategy. She purchased something that she really wanted. It happened to be business use. We wrote off the entire thing. And this is where the power of leveraging the tax laws really comes in. Because of course we know that there's ways in which we can write off vehicles, but how should we write off our vehicles? And what if we want to get a new vehicle? Should we buy it or should we lease it? Understanding the difference between actual and mileage is so important, but also understanding the difference between lease payments and depreciation is important. The reason why I say this, guys, is because if you decide to buy a vehicle and you didn't lease it and that car is in your name, you can depreciate that vehicle based on the portion that is business related over the course of 5 years. So let's just say I had a vehicle that's 100% business related. And let's say when I bought the vehicle was $50,000. Well, if I purchase the vehicle and I choose to do actual expense instead of mileage, I can write off the actual expenses, which include insurance, gas, tires, repairs, etc., including depreciation. So if I had a $50,000 car, I had it for 100% business use, 50,000 divided by 5 is a $10,000 write-off every single year without accelerating any depreciation. Typically, you're gonna accelerate some of that depreciation when you're filing your tax returns. Your tax accountant will teach you about that. I'm not gonna get into the thick of it, but that is how it works. 5 years is the magic number to remember. Now, if you are leasing a vehicle, can you write off your car payments? Absolutely you can. Only up to the portion that is dedicated for business. I wanna make sure you understand this. We need that percentage. How much is this car used for business? How much is this car used for personal? Now that I have this percentage, 50%, 60%, whatever it is, that's how much I get to write off on the car payment, the car insurance, the gas, the tires, the repairs, etc. See, this isn't that hard. It's not that hard to know that. It's hard for people to track their expenses. It's hard for people to sit down and have a conversation with a tax strategist in the year that they're making financial decisions, rather than waiting to get with their tax guy and saying, okay, so how should we deduct my vehicle? This is how we build wealth the right way. And this is why I created Taxes Made Simple. So we can continue to build wealth fast by leveraging information. And once we have information, we can make decisions quicker. My name is Karlton Dennis. Thank you for joining me on my Taxes Made Simple segment, and I look forward to seeing you on the next one. If you love this video, feel free to like, comment, subscribe. If you have any questions, you can reach out to me in the DMs or schedule a free consultation by visiting the link in my bio. Talk to you soon.